the scale of this thing separates us from our development peers. I mean, this is the largest gold deposit in Ecuador. So this thing is huge, and it's got some more potential upside.
The numbers are quite spectacular, world-class, tier one type stuff. Given the scale of it, there's only going to be a very few players who can step up and put that kind of money together to develop this. So what next? How quickly do you move this thing through the studies? What's the end game? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, please give us a thumbs up. It'd be much appreciated. And of course, do leave your comments below. It helps us understand the sorts of questions you think we should be asking, how you think we're doing, and of course, what you think of the company. And if you want to listen to this, you can catch it on a podcast or read about it as an article or transcription on cruxinvestor.com. And for early access members on Crux Club, don't forget you get to see this video first. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Marshall Koval. He's the CEO of Lumina Gold. And we spoke to Ross Beaty about this project a few weeks ago. Their model is exploration, development, and then flip. Now, they've just completed their PEA. Some huge numbers off the back of this. This is going to throw off 366,000 ounces of gold per annum. Huge indeed. NPV of about 2.5 million at 1680 gold. It's a big, large, open bulk gold project. So we kind of get into the details of what his plans are in terms of flipping this. They say they are having conversations. They are talking to people. I think the market doesn't seem to appreciate what's going on. A 250 million market cap for what they think they now understand seems quite modest. We talk about what they're going to do about that. I think there's possibly some discount being applied because of the Ecuadorian component. The government hasn't been too friendly to mining in the past, but obviously things are changing now. I think the scale of this is going to require over $1 billion of capex, so that limits the number of players in the market. And given today's price, are they going to be able to get themselves a premium? We shall wait and see. Now, I guess the kind of final component is it's a relatively low-grade bulk operation, kind of like Equinox, the other company in the portfolio. So take a look at some of the stuff we talk in the description below. If there's anything that interests you in particular, click on the number beside that topic. That's called timestamp, and that'll jump you to that part of the video. So enjoy what Marshall has to say. Hey, Marshall, how you doing, sir?
I'm great, Matthew. You holding up over there in England?
Oh man, just about. We're holed up. I'm drinking more. I'm working harder. It's all good. It's all good.
Yeah. Same over here.
Glad to hear it.
Harder too.
Actually, there's a little stat came out on our website earlier. It's talking about the drinking by different types of industries and miners. You guys have got it nailed. You're streaks ahead.
I think we had that even when it wasn't COVID.
True. Okay. Well, look, Marshall, if you don't mind, just for people new to the story, because we spoke last May, so it's not a story that we've been chasing, but I think now we should be. So for this new audience, can you give us a 1-minute overview of the business, then we can pick it up from there, okay?
Yeah, we're advancing our Cangrejos project in southwestern Ecuador, and basically it's a really large gold copper porphyry system, over 17 million ounces of gold. We just put out a really fantastic PEA that shows a net present value of $1.6 billion US. We increased the NPV over the 2018 PEA by over 600 million. We've extended the mine life 25 years, and this is a world-class asset, both on scale and mine life and gold and copper production. So we're excited about it, and we hope in the market can realize the value we've created. There's a bit of a disconnect between our share price and what we've produced, and we can talk about that a little bit more if you like.
I'd totally like to, because I don't get it. Like I say, look, first of all, it's a PEA. For a PEA, these are some pretty big numbers, but it is just that, a PEA. Okay, so early stage and the first economic assessment of what you think you've got here. But let's just talk about some of those numbers there, because in terms of the life of mine, 25 years, right. That's gone up significantly. The output has gone up. All the numbers have gone up. So what have you been doing since we last spoke?
Well, we drilled about 40,000 meters of drilling out at Cangrejos, and then we advanced the satellite deposit Gran Bestia. And the combination of the ounces that we added at Cangrejos and the Gran Bestia deposit, which was not in the 2018 PEA has really been the catalyst to increase the size of the project. On top of that, we've done an amazing amount of engineering work, and realistically, a lot of the PEA is well beyond a PEA. We were headed down after 2018, the PEA track, and we started to do pre-feasibility level work in certain areas of the project, like metallurgy, et cetera. And so a lot of the resources also been drilled to indicated. Most of the Cangrejos deposit is. So, you know, we're well advanced here and pretty happy with where we're at.
I bet. But I guess I guess what people will want to understand is where does it go from here? And obviously we'll put the link to the PEA down below in the description, but because the numbers are quite spectacular, world-class, tier one type stuff. So well done. But what next? I mean, where does this thing go? Because you know, you talked about you got to go through the studies. Obviously, I know this is, you know, kind of PFS level type PEA. You're telling me, but how quickly do you move this thing through the studies? And what's the end game?
Well, you know, the end game in the Lumina group, and, you know, I've been with Ross Beaty since 2004 through all the Lumina copper companies, et cetera. And basically, we're explorer developers. So we add value, we de-risk projects, and we exit. And that's still the business plan, and that's been the business plan from the beginning. Now, both Ross and myself have a long history in the mining sector, in operations also, and I'm on the board of Equinox Gold with Ross. He's the chairman. We have 6 operating gold mines. So, but the business plan of Lumina Gold is definitely different. And we're at the stage now where we understand the value proposition. We understand the scale of the project. We understand the risk. And it's time to move it on to somebody that would build it. And, you know, that's kind of where we sit. Now, as far as additional work post-PEA, we're going to continue with the permitting process. We're going to continue to look at portions of the project that we can optimize from an engineering perspective and kind of evaluate that. And then there's a lot of recommendations from the various consultants that worked on the project that we're evaluating. So I have to pull all that together and go to the board and talk about where we head next on the project. And, you know, we'll get to that point. But the business plan is intact. You know, we hope to exit.
Okay, but again, just for the sake of people watching this and going, hang on, those are some big numbers. I don't understand why the market cap's only 250. You've got to go through a process of optimization, de-risking, and, you know, the usual stuff, right? Nothing you haven't done before a few times. But what of those things is actually going to, you think, make a difference in the market in terms of driving that share price before you have to have conversations, or you want to have conversations with people about taking this thing over?
Yeah, I think if you go into our deck and you look at page 4 in the deck, there's a really good graph there. I mean, if we go back from 2017 when we released a resource estimate of 4 million ounces of gold, and fast forward to today, you know, we've got 17 million ounces of gold in the deposit. But if you look at the share price, you know, gold over that period has gone up 41%. Our share price has gone up 19%, but we have, you know, increased fourfold the resource, right? So there's a disconnect in the market as far as what's going on the project. Now, part of that is Ecuador risk. Obviously, there needs to be some sort of risk discount in Ecuador, but there's a total disconnect in value that the market is seeing. And, you know, I think this PEA should start to demonstrate the value of the project better, and hopefully we'll see a move up in this positive gold environment with our share price.
Okay, well, talk to me about Ecuador risk. Do you think people are justified in applying some kind of discount to Ecuador?
I think for the developers in the earlier stage projects, for sure. I think if you look at Lundin Gold, it's kind of broken that metrics, and it's got a good PNAV ratio because it's a producer now. And really, that's a really good project to talk about a bit. Fruta del Norte has proved that you can permit, you can finance, you can construct, you can commission, and operate in Ecuador. And as Fruta continues, that's a good international marker for responsible mining in the country. And then on top of that, you've got the Mirador project, which is Tongling Mining, and it's on the scale of Cangrejos. It's 60,000 ton per day copper porphyry deposit, and they've been able to do the same thing: permit, finance, construct, and operate. And both of those projects were commissioned at the end of 2019, the last quarter. So, it shows that you can operate in Ecuador. And I think, Ecuador's history in the past has created part of the uncertainty of where Ecuador's headed. But there's strong support out of the government. It's going to be more and more important mining in the country with oil prices down. They have some tourism and agriculture, but mining's the key component of the economy going forward. So I think that Ecuador risk as time moves on will move away. But also, if you look at a broader brush, the developers and the junior explorers, they haven't moved up as much as the senior and mid-tier producers. So that's another aspect of why the share price isn't where we believe it should be. And we're starting to see more interest. We've moved up recently. So we're hoping that the market moves up for us.
Okay, so given you guys have done this once or twice before, to put it mildly, you've got Ross Beaty in the background, beating the drum. People watch and follow his moves. You are very clear that you're an explorer developer. What are the decision-making criteria that you as a board go through to decide the timing on this? You've talked to us about Ecuador risk falling away. You've talked about moving through the stages, as it were. You are just at PEA. At what point do you start to have serious conversations about flipping this? What should shareholders and potential investors be looking for?
Yeah, let me step back a little bit and kind of walk you through that. I think we had inbound interest, in the last couple of years, but we didn't understand fully what we have. We had this satellite deposit at Gran Bestia. We put out a new resource in November, so we finally started to understand the scope and the scale of the project. And obviously, if you're a seller of a project, you want to gain the best value you can for shareholders. So we now understand the scale of this thing, and there's still upside potential to increase the size of the resource at Cangrejos and Gran Bestia. But we know the size of the infrastructure you need for it now. It's 40,000 ton per day projects, a big project, expanding to 80. So we have all those metrics in place, and we have our own view on valuation. So we've started to talk to some groups. We've had inbound interest, and we've signed some CAs. But we're, really this milestone of the PEA kind of cements what the value proposition is for us and others. So that's where we sit.
Okay, but what does that look like? I'm trying to get an insight of the way you guys think, because you've done it before. You know the size and the scale of this. Given the scale of it, there's only going to be a very few players who can step up and put that kind of money together to develop this. So are you able to have a conversation at these prices where you can get a premium to today's prices in terms of market cap and share price? Or do you have to wait to develop this out to prove up more, to de-risk more? Can you have that conversation today?
Yeah, that's a really good question. I think we're at the point where we understand that, and I think obviously the conversation I had just a minute ago with you about being undervalued and what's happened since 2017 to now, we've really grown this thing, and we're at the point where we can have that conversation, and we're looking at a premium to market sort of scenario.
But are you having serious conversations, or are you just sniffing around and sort of seeing what you can get in the meantime? Because what you're doing in terms of moving this thing forward isn't exactly burning through the cash, I guess, is it?
No, we're to the point we're going through the PEA. We've really ramped down on our cash burn. We've got a camp that we need to maintain, and we've got community programs, and you have to run the company at a corporate level. So we're not at a high cash burn rate. We're at the point now where Ross has come out to the market in January as the largest shareholder and said that he wants to move the project on. And, we have the ability within the group, there's over 27% ownership between Ross and management, that if we need money, we can just do shareholder loans and all to keep the company going. So money's not an issue. It's, we're just at the point now where we can demonstrate what the project means and to those who are potentially interested in it.
Okay, and so it sounds like you're in the final yards. That's what you're telling me.
I hope so.
You must. You're obviously pleased with the PEA, but you've got no desire to kind of take it through to the next stage of PFS.
Well, I think what we have to do is we have to plan that way, and we have to scope out the work, and we have to continue the aspects of getting the project to the point where it can be permitted effectively. We've done a lot of work on that. So there's still work to do. I mean, we're just not going to sit around, but those are the kind of things we do. And, we'll talk to people that have an interest.
Okay. What's the feedback you're getting from other shareholders? What are the institutions saying to you? Do they want a kind of payday here? Are you under pressure at all, or are you genuinely able to move at your own pace?
No, I think I think our pressure is internal pressure. It's part to do with our business plan. I think institutions are just starting to see the metrics that we've laid out. The supporters we have that are in the story now are comfortable. We're not getting any pressure from them. They know that what the business plan is, and that's kind of where it sits right now.
Marsh, if you don't mind, let me just stick with the Ecuador component a little bit, because you've talked about a disconnect in the market and discounts being applied because of the Ecuador factor. I mean, how much of it do you attribute the disconnect in the market to Ecuador, and how much do you attribute to other factors, such as the scale of this operation?
Yeah. So if you look at PNAV ratios in Ecuador developers, for instance, it's in our deck. I don't recall the page number.
Page 16, I think I'm looking at
it's
here.
In our deck on page 16. What you see there is roughly a 0.29% or 0.29 of PNAV is what we're trading at, and the Ecuador developers are right in there. But if you look at broader developers in other regions, they're up over 0.5. So that shows you right there, there's a disconnect on the Ecuador trade, and all of us are kind of dealing with that discount. And then if you look at sort of the feedback we get on Cangrejos as well, Cangrejos is roughly $1 billion initial capital project. Can you finance it? Can you do those sort of things in Ecuador? Well, Mirador was $1.2 billion. Fruta del Norte was about 700 million. So you can build projects in Ecuador, you can finance them. So that aspect is pretty clear in the market that you can do that, and you can finance projects of this scale. The other issue that we get is the question of the grade of the deposit. And realistically, this thing is quite large. It's on the scale of a porphyry copper deposit, 40,000 ton per day, going to 80,000 ton per day in year 6. So you have to look at it for comparable scale projects. And on a copper equivalent basis, for instance, it's similar to Cobre de Panama, or Red Chris, these type projects that have been built. So, those are the kind of metrics that you have to look at it. And I think the 25-year mine life, it gets you through multiple cycles in the industry. So, like for instance, today, Newmont has an operation, very similar grades, Boddington in Australia. Similar gold grades, similar copper grades. They're a hair bit higher, but these type of projects can be built and they can be profitable and they can survive multiple cycles in the gold business.
I also noticed page 17 in there. You're talking about how you compare to your development peers as well. So it obviously concerns you. You're worried about it, but what are you doing about it?
Well, we're at the point now where with the PEA, we're showing that the scale of this thing separates us from our development peers. I mean, this is the largest gold deposit in Ecuador. And if you look at it, it's the 37th largest gold deposit in the world, independent of developers, producers. So this thing is huge, and it's got some more potential upside. So we're getting the story out, we're making it known, we're showing the economics of the project. And listen, when we designed the pit at Cangrejos and Gran Bestia, we did it at $1,100 gold. In our economics, we used $1,400 gold and $275 copper. So we're not overly optimistic in today's market with the prices we're using. And so this thing has a lot of torque and upside to the metal price. If you look at an NPV at, say, 1620 gold, which is plus 20% of what we did, you're looking at a post-tax NPV at $2.5 billion versus the 1.6 at 1400. So this has to be attractive to, some of the larger mid-tier and major developer miners.
Yeah, I want to talk to you about that just very briefly, if I may, because like if you're coming to talk to me with my banking hat on, I'm going to be working with a flexible financial model, and I'll work all this stuff out for myself. But you're going out and promoting this at $1,400 gold. I mean, why aren't you using 1620 as the main headline figure?
Well, I mean, you got to look at the long-term gold price and analyst consensus. And right now, long-term gold price, sort of the second quarter of this year, was sort of 1430 gold. And so, that's how we have to look at it. But also in the sensitivities in the PEA, we showed plus 20% and minus 20%. And that's sort of the numbers that I was talking about in the $1,600 range, what it does to the torque of the project on an MPV basis.
Well, you're being very, very conservative and not overly salesy, which is very unusual. I think this is probably the lowest number I've seen used for any company that I've interviewed this year. So well done on that. Marshall, thanks so much for coming back on the show. It's been a long time. Sounds like next time we speak, you've probably sold this thing, right?
Hey, I hope so, Matthew. I'll look forward to it, and I hope it's not another year.
Oh, please no, please no. Right, Marshall, we bid you well. Speak soon. Pick up the phone when you have some big news for us. We'd love to hear from you.
All right, stay safe on that side of the pond. Take care.